$396,000 is what I made day trading in the month of October. And in this video, I want to break down exactly what trades I've taken, what my trade process was, what days I traded, what the best setups were, what are things I did great, and what are things I did bad. I just want to walk you through a whole trading month and just give you guys an insight to my performance. So with that being said, let's dive into it. Now, first and foremost, for all the naysayers that are new here, here is my broker statement. As you guys can see, $396,000 from October 1st to November 1st, just to kind of get that out there, right? Now, with that, let's dive into these trades. Now, one thing I want to be crystal clear on is that I know I was talking about this number of $396,000, and I know when people see this number, this is what they focus on. Now, what I want you all to understand and what I want every single person watching to realize is that this number does not matter. This number is irrelevant. The only number that matters in terms of performance is this, R multiple, right? So when I come in here, what is the R multiple of that day? What is the R multiple of that week, of that month? The reason that's the only number that matters is because we are all trading with different risk size, different account size. We have a different approach to the market just from the risk side, right? Forget what our approach is from traders and so on. But from a risk perspective, we are all risking different percentages. We all have different account sizes as mentioned. But what we can look at to analyze performance is R multiple. Now, what is R multiple? R multiple is basically if I'm risking $200 on a trade, and let's just say I make $600, R multiple is saying my R multiple on that trade was 3R, meaning I made 3 times what I risked on their trade. Now, some people might see a $600 day, some people might see a $60,000 day. Now, what they're both contingent on is what the underlying risk was. Both of these people could have risked a different amount, which is why we want to always focus on the R multiple. So if I have a day or a month where I make $60,000, but I've essentially risked, let's say $30,000 to make that 60, right? My R multiple is a 2, meaning I made twice my risk amount. If someone has a profitable trade of 5,000 and they risked 1,000, their R multiple is 5, okay? That's why this is the number I want every single person to focus on. This is a number when you guys are evaluating your days, your weeks, this is what you should focus on. Now, going into my trading performance, yeah, it's cool, 396,000, which is once again what everyone is going to be focused on. But I want to once again focus on this R point. 61R is what I made on the month. So I made 61 times what I risked. If we take this number out, we could maybe look to see that, hey, I probably made $10,000. If I made $10,000, I made 61 times what I risked, whatever that risk amount comes to. Maybe I made $30,000. I made 61 times what I risked in terms of R. Now, going on to each and every single day, if we look at some days, I made or lost 3.6 R. So I could have been risking, or let's say risking $1,000 here, right? If I risked $1,000 here, I lost about $3,600, right? If I was risking $10,000, I lost about $36,000. So if we go into this day and we take a look, right, I lost $29,000, right? And obviously the amount I risked was about $10,000, but I ended up losing a lot more than what my R was. Same thing if I go into one of these days. I have a 2R, I have a 3R, I have a 7R. I made 7 times what I risked, okay? So now recapping my month, some of the stats we want to go over, went over these. Let's go over my win to loss ratio, right? That is something that I know needs improvement, right? I had a 2.11 win loss ratio, and this is also a number that I believe every trader should be focused on, just to kind of understand how much is each winner making and how much is each loser making. So if my average win to loss is a 2.11, if I'm losing $1,000 per trade, I'm making $2,000 per trade. This is pretty good, right? Obviously, if we can get this number higher and we can have a bigger discrepancy between this number, that'll give us more comfortability. I did have a good win percentage. Now, one thing I do want to focus on is this has been one of my best win percentages of the year. I'll typically have a 40 to 60% win percentage, sometimes 40%, and I'm able to be profitable. This was one month that obviously trades just came to me a lot better. And not every month is also like this. So I also want to point that out. Day win percentage, essentially I was green every day, which is once again, not the case. I had one losing day where I lost roughly about $29,000 in that one particular day. Okay. Now, when I'm basically recapping my months, as mentioned, these are some of the stats I'm looking at just in terms of performance. How was my performance? What is my R multiple and so on? Now, just to recap this month, I had 16 trading days, 35 trades. What were my best setups? And I'll go through some of my setups. And my setups, guys, are always contingent on the theme of the market. So October, as you guys have probably seen, the theme of the market was extremely bearish, right? Start of October off with a little bit of a sell-off, quick bounce the first week, and then a massive sell-off afterwards. So because of this sell-off, and because I was able to recognize this sell-off, I was able to capitalize on that movement, right? So once again, these are some of the 3 setups that I have that did really, really well. So if I go into my playbook and let's say I just look through some of my setups here, some setups I have, continuation sell-off, did really, really well on this. I'll go through some of the trades here, about 236K, most likely just on the year on that setup. Some days I'm going to break down for you guys in a bit. And then here are my notes for the month, right? So things I did well. So every month and every week, I like to go through things I did well, things I did bad. So these are some of the things I did very well this month. I was able to capitalize on the market read pretty well. So meaning how the market was able to sell off, I was able to capitalize on that. So if you look at the P&L aspect, as you guys can see, pretty strong start. I had a strong start around the 11th, 12th. I kind of got a little bit shaky. 13th, I didn't go in with a lot of risk. So this week of 11, 12, 13th, when you come here, right, 11, 12, 13, I'm kind of confused on what the market direction is. And then the next week is where I got really, really comfortable, or a little bit more comfortable, as you guys can see, to take on trades. Same thing again, 18th, 19th, missed out on some days. Wasn't sure if we're going to see a continuation sell-off. Same thing on the 19th, even though the 19th I think was a pretty good day. And now where my trading really picked off, right, and I'll show you these days, are the 25th, 26th, and 27th. So when we go to the 25th, 26th and 27th are the days where I was able to make a lot of my trading P&L for the month, right? And the reason for that is because I had one setup that typically happened all 3 days, and I'll show you guys that in a bit. And I was able to maximize on that setup consistently, right? But just putting the dollar value aside again and going to these 3 days and looking at the R multiple, one day, 4R, 8R, 10R. This day I risked whatever I risked and I made about 60 grand, where whatever I risked, I made 4.5 times that amount, right? Same things this day. Whatever I risked, I made about 8 times that risk amount. And when we look at this trade, about 64,000, about 169%. And these big wins, guys, didn't start coming in until the end of the month, right? Prior to the end of the month, my biggest winning day was about 42K. But these 3 days, I was able to make about close to 200 grand in just 3 trading days by capitalizing on a setup that the market presented. And that's what I was talking about when I was going through things I did well. I capitalized on the market read really well, right? I also allowed my trades to run and hit beyond my planned R. And that's what happened on these 3 days. My planned R was probably a 2.5, maybe a 3 tops, right? But I was able to get a 8, maybe a 10 in conjunction with the other 2 trades because these trades were trend days. And I'll talk about that in a bit. I also executed well, best winning percentage month of the year. And I was very selective of my trades. I liked how this month I was very calm. I was selective. I was letting the trades come to me. I wasn't rushing them. I've also increased my time horizon. So you'll see some of the trades that I've taken aren't on the open. They're trades that are kind of like, I'm letting the market formulate and the market come to me, and they're happening at 11 a.m. Eastern time, maybe 12 p.m. Eastern time, maybe even 1 p.m. where I'm allowing these trades to generate and continue the sell-off, right? Now, things I need to improve after recapping. Someone became biased some days, so I was able to read that, but I was very biased before the day started, and I was kind of stuck on, oh man, I think we're gonna go lower or we're gonna go higher. And because the market started selling off, it became really hard to read the up days, even though I was able to capitalize on 1 or 2 of the up days, right? This led to my biggest trading loss of the month. So the biggest trading loss I had, which was close to 30 grand. It was because I was short on the 23rd. And when we go to the 23rd, we gapped down, but we had a strong rally towards the upside, right? So I lost or had the biggest losing day of the month because I was biased, right? And then when we go into a few more notes, being biased made it difficult for me to take an additional trade. So a lot of times because I was biased, the other direction of the trade that was there, I wasn't able to capitalize on it. My win to loss ratio needs work. 2.11 isn't the best, especially with my R and win percentage. I had a pretty strong win percentage. Let's just get that clear. This is not an average win percentage where I'm right 70%, 80% of the time. This is not normal. Just want to be super clear about that, right? So because I had a good win percentage, if this win percentage was to go lower to, let's say 50%, I would still be profitable, but my P&L would take a drastic hit. So this, to me, a lot of times I'm trying to be at the 2.5 to 3, right? I'm trying to make 2.5 times to 3 times what my losers are, right? That puts me at a more comfortable state of being wrong more times and still being profitable. This means when I do take a loss, it's bigger than it should be. My strong win rate helped me here, but a weak win rate would drastically impact my P&L as mentioned, right? So now let's go through some of the trades and let's go through some of the setups. So here I am on my playbook section, right? Let's go through some of these setups. So one setup that did really well for me this month is my continuation sell-off, right? So this is what I want to share with you guys. So these 3 days where I was able to really capitalize on the market, especially these 2 days, guys, the market presented the same exact opportunity. And I want to show you guys that really quick. Took one trade, that was it, okay? Looking at this trade, I'll show you my entries, I'll show you my exits, I'll show you all that stuff in a bit, but let's go into my daily journal, right? So this is what happened on the 25th, and then I want to show you what happens the next day, right? So we have the 25th, let's go on the 26th, and let's look at that day too, right? Let's look at both of these days. Let's just look at the charts just to get an idea of my continuation sell-off. So this is the first trade where I was able to make about $59,000, right? Now, the trade I had here was a continuation sell-off. And in this continuation sell-off, when I do go to my playbook, these are the following criteria I am looking for. And these are the criteria that worked back to back, right? One, what I typically look for is I look for some sort of strong selling happening around the open, right? We get some strong selling. Maybe we get a gap down into a key level. So this is the 25th, right? Wednesday 25th. We gap down. As we gap down, we push right below yesterday's range. We start consolidating, and right when we consolidate, of course, after consolidation, sometimes I am expecting some sort of reversal. Now, if there is a reversal, that is the key area I'm watching for, and I'm watching that key area to see if this reversal has any strength behind it. Is it actually a strong move? Are we just going towards a liquidity area that I'm watching to maybe just kind of reject off the key zone? And then do we start selling off from there? So all of these things are question marks. So what do I do? So a few things that I look at when I am analyzing my trades. I am looking at, let me see if I have it here. I am right here. I am looking at a footprint chart to give me confirmation, to show me, are there trap buyers? Are there trap participants? Are there aggressive buyers, aggressive sellers? Who is in control? So I look at this a lot to get a good idea, right? But before I even get there, I'm looking at the structure. And the structure here is once we start going up to this area, we're hitting our key zone, right? Once we hit our key zone, I'm seeing a downside structure, which started off the day, and I'm seeing a weak imbalance. What that means is I'm still seeing that sellers are in control. No strong buyer has entered the market yet. This leads me to have a continuation sell-off, meaning I'm looking for that continued play, maybe into a new low of the day, or maybe even a lower point, which is 4,200 on that day. So when I see that, I am taking on a short position. So when we see my short position on this, right? When we go to the 25th, right? This is what I am essentially looking at. So when I go to the 25th, as you guys can see, around 11:05 a.m. is where I take my short. And right when I take my short at 11:05 a.m., I just ride it towards the low of the day, right? So in terms of my risk, I'm risking about $13,500 on this particular day. I ended up making about 60,000 and I ended up making 4.4R. Now, a few things I want to show you about this trade, which are pretty cool. Put about $38,000. Once again, not typical trades. These were trend days. On trend days, because I'm trading options, I'm looking for maximized returns. Don't happen every day. But let's just say someone risked $1,000 on a 4R trade or 4.4R trade. You're looking at a 4,500 return. Once again, this is not happening every day. This is happening on trending days, especially when the market is selling off. And for anyone that's not familiar, I am trading options, right? Second, a few interesting things about this trade. Entry, solid. Exit, I left, obviously I left some money on the table if we do look at it because I sold a little bit way too early. If I held, I would have made more money. But my exit on these continuation sell-offs, most of the time, right, are happening. I am looking for the low of the day. I don't want to get trapped in a low of the day where I start getting trapped and we start seeing a reversal. Now, some things I could have done better, and this is where recapping is really helpful, is I wish I left some runners. If I left some runners, I could have possibly made more. But once again, making more is a concept in trading where sometimes I'll hit profit targets, and if I don't even want runners just for the mental sake, where I'm like, you know what? I've hit my profit target. I don't want to have the mental up and down of I could have or should have made whatever amount it is. And I'll just take my full position off, especially if I have a trade where I'm making a good percentage or I'm making a 4R or 5R. I'll take that R and I'll say, you know what? This R is big and this means more to me than giving some of it up. So I'll take that trade. Now, if you look at the structure of this trade and you look at the structure of everything that's happened here, we're going to go to the next trade and I'll show you guys how a lot of times your setups, especially when you're in tune with the market and you are recapping, you are going through your trades and so on, are very consistent, right? So if I go through the next day, right, guys, look, relatively, we had a similar structure, right? This is the day before that I did really, really well on, right? We gap down, right? Gap outside of yesterday's levels, retrace into the key zone, same sell imbalance, weakness right there, continue to a new low, right? We look at this day, same exact thing. We gap down from yesterday's area. Once again, not a massive gap, but we gap down. We gap down below 4,200, key zone in ES. 4,200 is a massive, massive level. We gap down right below that. We open, we get the morning kind of shakeout, which I didn't trade and I wish I traded that, right? We get the morning shakeout, right? I don't, obviously I didn't take the morning shakeout, which I wish I did, but I was patient. And this is what I was talking about, me being selective this month. I was extremely selective on letting certain trades play out. If I wasn't selective, maybe I could have taken on more trades. Who knows if they would have worked or wouldn't have worked, but I was just letting trade ideas formulate, right? So coming to this trade, same exact thing. We open, gap down, right, from yesterday's area. We start selling off. We establish a bottom around 41.70, 41.75. We establish a bottom. We hang out at the bottom, and we have a quick move into the opening price of 4,200. This is once again where I start looking for the following, right? Going into my playbook. Did we hit the key level? Yes, we did. Seeing a downside structure? Yes, we are. Is there a weak imbalance? Yes, there is. Because of these things, I'm able to go and I'm able to take on my short position that I want to take on for this particular day. And seeing so allows me to capitalize on this particular trading day. And when I go into this trading days action, right, you guys can see same exact thing. We go in at 10:55. We see the rejection, hit the opening area. I go short, boom, take the low of the day. Same thing here. I didn't sell. I didn't scale out. I didn't get the perfect exit. My entry I was happy about. I didn't get the perfect exit. It's okay. I got the low of the day at that particular point, and I will live with that. When I say I live with that, I'm talking about an 8R trade, meaning I risked $7,500 of my capital on this trade. Yes, I put $37,000, but in terms of R, I risked $7,500. These are trades that I'm really, really happy about, right? Now, when we go to trades that I'm not happy about, right, I want to focus on 1 or 2 more days and I'll kind of take it from there, right? When we go into another trade that we've even had in in November. And, when I do my November recap, I'll show you guys, but this is another trade exhaustion reversal, right? We've been seeing this a lot, especially when we're getting massive, big down days or up days. So just to kind of give you guys a theme, right? Whenever we have a very aggressive sell-off in the market continuously, there are days where I'm looking for a squeeze. And, in November, we've had that already. If you guys have seen November's market, we've gotten a squeeze like 3 times, right? So this play I've taken in November too, and I'll show you guys in the upcoming weeks too. But this is basically where I'm seeing an exhaustion squeeze. So this happened in the beginning of the month. So just kind of walking you through some of the ideas. So on the 6th of Friday, of October 6th, we had NFP. We had non-farm payroll. It came out at a key level. Market dumped, right? So if we go here, we look at this. Market dumps after we have non-farm payrolls. We go to an exhaustion point and market tends to hold. So I want to show you guys what I mean by this. So here's a chart just to take a look at this. We have non-farm payroll, right? We have an economic event for anyone that's not familiar. Market gaps down after selling off from this level. This is the level the market sold off from. We open up, and the interesting thing that happens here are buyers are able to maintain control the whole day. And because buyers are able to maintain hold on the open, that showcases that this was an overreaction move. And during days like this, especially when we've gapped down, we've seen overreacted moves, right? We held the area pretty strong, right? Passive buyers are stepping in and accumulating these areas over and over again. And we're able to move with strength. These days, to me, replicate a squeeze, replicate a strong move to the upside. And that's exactly what we've seen in November. So this is where, guys, tracking your setups, tracking your days, identifying the days you are trading well, identifying the days you're not trading well is extremely important. And one thing I do, and I recommend everyone to do, is before you start your trading day, have scenarios for the day. What are the scenarios? Maybe the market overreacting, we recover after massive sell-off. Maybe we get some short covering. So I'm already looking for that recovery for this day. I'm already looking for that exhaustion that's happening because, hey, we sold down over and over again during this time. And I'm just looking for a reversal if the market gives me clues. That's why tracking these things, paying attention to these things are extremely, extremely important. Now, just to leave you guys off with a few things, just going over this once again, guys, when you guys are trading, and just to leave you with some advice, don't look at P&Ls. Don't look at my P&L. I post these numbers, and realistically, I hate posting that I made this dollar amount, but I understand that is what is going to get you guys to watch this video. If I said, hey, I made $9,000 this month, and let's say I did, you guys don't care, right? But if I made $9,000 and I risked only $1,000 and I had a 9-hour month, that is phenomenal. So I want you guys to switch your mindset and start thinking in terms of R. Start thinking in terms of performance. Stop thinking in terms of P&L, right? Every month when I go through my P&L, my last metric is my P&L. There's months where I have great P&L months and I've traded terribly. And there's months that when I focus on the process of what is my win to loss ratio, what is my R multiple, what are my best setups, am I executing my best setups, effectively? Am I taking my trades in a good way? Am I being selective, right? Do I have good pre-market game plans? Do I have good biases for the day? Do I have good reads on the market? When I focus on this allows my P&L and my results to be better than saying, well, I need to go and make 100 grand. Like, remove that. So if you are going into November, you are going into December, you are going into the end of the year, go and say, let me start recapping my trades on a weekly basis and looking at areas I'm doing well, areas I'm doing bad in, and what I need to focus on in terms of my process and not my P&L. If you do that for 6 months and so on, you will see that week after week, your trading starts improving because your P&L is a byproduct of your performance, and your performance is what you need to focus on, and your performance is not P&L. It is your process that you follow each and every single day. So with that being said, I hope you guys enjoyed this recap. I hope you guys start taking your trading more seriously and you start recapping your trades and you have a process-driven system. With that being said, I will see you guys on the next video. Thank you.